Hello, this is Andrew Thake from Minds and Money. Delighted to welcome Ronald Peter Stöferle, who is managing partner and fund manager of Incrementum AG, joining us for today's keynote Fireside Chat. Great to see you again, Ronnie.
Andrew, Happy New Year.
And Happy New Year to you. Well, look, 2022 has been a great year so far, but 2021, it was a bit of a year to forget for precious metals, wasn't it?
I think that gold has kind of lost its mojo, and I can sense that there's quite a lot of desperation in the gold space, in the mining space in general, in the silver space. But from my point of view, we are very close to the bottom, and if you want, we can talk about the reasons for my confidence and actually answer the question why gold lost its mojo last year.
Yeah, I think there's definitely start diving and look at sort of 2021 and as to what went wrong for gold or what didn't go as expected. And I think you may have some slides to go and share. So why did gold lose its mojo last year?
Well, I think it's a couple of different factors. I think expectations were pretty high already. I think that going into last year, everybody expected gold to continue skyrocketing, but people tend to forget that first of all, nominal yields have risen quite a lot. They tend to forget that the US dollar was pretty strong. They tend to forget that there was huge opportunity costs, especially from equity markets, the S&P being up 27%, and of course opportunity costs also coming from the crypto side. Mm-hmm. So if you want, Andrew, let's dive into the topic, and I've got some slides prepared.
Excellent.
So, well, as you know, a picture or a meme says more than 1,000 words, and that says, I predicted 7% CPI in 2021. Wow, how much dollars did you make? Actually nothing, because I bought gold. And I think this perfectly describes the situation that we see in the gold space, unfortunately. Mm-hmm. Now, as we can see on this slide, now basically all the big banks are super bearish when it comes to gold. I had a look at the price forecasts based on the Bloomberg CPF function, and there are no bulls out anymore. So I think that last year really what was a big shift was the year when basically most or all of the bulls threw in the towel. And I think normally from a contrarian point of view, that should be pretty positive setup. As we know, Andrew, everybody is concerned because the Federal Reserve will start hiking rates. This year, they will stop quantitative easing, will start quantitative tightening. Well, actually, if we have a look at the numbers, and we currently do prepare a little research piece analyzing how gold actually does before and after the first rate hike, then actually it's a bit of the, sell the rumor, buy the fact. So actually up to 2 months before the first rate hike, that's demanding a challenging environment for gold. But as soon as the first rate hike happens, then normally gold starts stabilizing and starts rising again. And I've been on record, I posted it on Twitter, I said, mark my words, this will be the shortest and the shallowest rate hike cycle in the history of the Federal Reserve. Mm-hmm. So I'm not really nervous about the rate hikes, and I think that we're really seeing some sort of peak pessimism.
Sure.
Now, I think, Andrew, if we have a look at this table, mm-hmm. It shows the performance of gold in various currencies. Mm-hmm. I think that investors tend to forget that 2019 and 2020 were fantastic years for gold. Gold was up in dollar terms 18% in 2019. It was up 25% in 2020. And last year, gold was down 3.6%. Now, 3.6%, of course, given the circumstances, that's a bit disappointing. But if you compare it to the performance in the 2 previous years, I think that's a pretty decent year of, as I would call it, taking a breather. And we're seeing similar developments in other currencies. Actually, thanks to Madame Lagarde, gold was up in euro terms last year, 3.6%. So what I want to say with this table is actually, if we put it into perspective, gold didn't do so poorly as the market sentiment would suggest at the moment.
Yeah. So for 2022, when you're talking to your clients, are you advising your clients to increase their allocation to gold?
Well, from my point of view, Andrew, I think it's always advisable to have a position in gold. I think it's one of the very few currencies that doesn't have any counterparty risk. The natural of inflation of gold is 1.6%, which makes it next to Bitcoin basically the hardest currency around. So yes, I think given the developments that we're seeing in the macro world, given the enormous amount of pessimism that we are seeing in the gold market, therefore I think it's a pretty good setup. But what we see on this chart, for example, Andrew, is, as you know, one of the big words last year was transitory. So the Federal Reserve and especially the ECB, they told us, well, inflation is a topic again, but it's only transitory. Now, we published a special paper about inflation in December 2020, when inflation in the US CPI was at 1.2%. In December 2021, inflation was at 7%. So inflation definitely is a topic again. And now even the Federal Reserve has made the U-turn and said, well, perhaps it's stickier than we would all expect. Now, a big question, Andrew, is, why didn't gold really react to significantly higher inflation rates? Because from my point of view, the longer term inflation expectations, they still remain subdued. So the market at the moment doesn't really discount that inflation will continue to be a concern. And I think as soon as this changes, then I think the price of gold will really break out and probably make new all-time highs. But for now, the market is seeing inflation as a concern for the short term, but over the long term, the market doesn't discount any inflation.
You mentioned earlier on that gold had lost some of its mojo in 2021. Oh, and I think your next slide has almost answered the question before I asked. The question I was going to ask is, to what extent did those people that were bullish about gold go and defect to crypto? And then the follow-on question is, like, will they go and come back to gold in 2022?
Well, Andrew, I think that the whole discussion and argument and the whole fight between the gold camp and the Bitcoin camp, this is something that we don't really like. In fact, we've got 2 investment funds that combine gold and crypto assets, and from my point of view, that's a prudent way to go. However, I think that crypto kind of stole the show or stole the flow, as you can see on this chart that shows the cumulative monthly flows in Bitcoin funds and gold ETFs. So I think it's investment flows, but it is also media attention. Now, putting out the piece about gold last year, For every journalist, that's basically the most boring thing that he can imagine. If I put out a research piece about Bitcoin saying why Bitcoin will go to 500,000 or whatever, of course, this is something that all journalists really loved. However, I think that with the price action in Bitcoin at the moment, it clearly shows that Bitcoin is still a risk-on asset. So it is positively correlated to risk assets, especially equity markets. While on the other hand, we know that gold is a very reliable hedge in times of equity crashes or market turmoil in general. So
Yeah.
I think that.
Yeah,
Sorry.
sorry, sorry. Yeah, so just interject with a question. I always had it in my head that people, when they hold crypto, they're more likely to be short term, more likely to be day traders, and people who hold gold are more likely to be long term and obviously holding it for years on end. Is there any like truth in that, or in like, is it in like, if so, is it like changing?
That's a great question, Andrew. I think I would agree to that. However, we should not forget that the Bitcoin or the crypto market in general is very young, and I think it's that the market is really growing up. When we launched one of our the first fund that combines physical gold stored in Liechtenstein with Bitcoin stored in a cold wallet and using our options overlay. So we're basically harvesting the enormous volatility of Bitcoin. When we started that fund, we were one of the largest market participants at the CME when they launched their options market. Now we can see that many large institutional players are coming into the market. So I think that the mass adoption is really happening. And I think that Bitcoin has really grown up over the last 2 or 3 years. However, I think that the whole narrative that Bitcoin is stealing the show from gold, I think it's a bit overrated because I don't know too many. I don't know if one would say crypto bucks like gold bucks, but perhaps Bitcoin hodlers would be the right term. That are really too keen on gold, and I wouldn't say that I know many people from the gold side that massively reallocated capital into the Bitcoin space. So I wouldn't say that it's two separated camps, but I think the overlap is not that big as many people would suggest. And from my point of view, to come back, I think it's all about relative scarcity. Crypto and our Bitcoin and gold have where do you have the chart? Here it is. Have basically the same so-called stock to flow ratio at the moment, while after the next halving, Bitcoin will have a significantly higher stock to flow ratio. So therefore, it will become harder money than gold. But seeing an inflation rate of 1.7% per year in times when central banks are raising money supplies. For example, in the US, M2 grew by 25%. I think this relative scarcity is really what counts going forward. And therefore, I think that gold and Bitcoin have to have a role in every portfolio. Of course, I think I once made the comparison. It's like driving a big, reliable, safe SUV, but you can also have your Ducati motorbike. You can have both in your garage, and of course, on a Ducati, it's perhaps more fun. But as soon as it starts raining, as soon as it starts snowing, then you rather want to be in your safe and reliable SUV. So I think from a portfolio point of view, both make sense, but you have to volatility adjust.
Okay, well, taking that analogy further, so in 2020, at Mines and Money, where we saw the greatest increase in mining companies was from silver mining companies. And then 2021, not so much. I think that silver was 13% down. So, okay, I should have like a gold coin in my garage. I should have a gold car in my garage. I should have a Bitcoin car in my garage. Should I have a silver car in my garage as well for 2022?
Well, as you can see on this slide, silver was down 11% last year. In euro terms, minus 5%.
Yeah.
But we shouldn't forget that 2019 it was up 15%, and 2020 it was up 47%. So the same like for gold, we all know that it's roughly 3 to 1 the volatility of silver compared to gold, and then that turned out to be pretty accurate last year. But I think that silver cannot really decouple from gold. So I think we really need some tailwind coming from the gold market to silver, that silver really starts outperforming. However, I showed you why there's lots of desperation in the gold space. I think silver is even worse. So if my thesis, if my assumption is correct that gold has made its bottom, then I think silver should be a buy. And we all know how small the market is. We all know that on a relative valuation basis, silver is a steal at the moment, but I think it cannot really decouple from the gold market.
Geopolitical risk is always an issue, whether in 2022, 2012, or 2002. Having said that, it seems to be on the rise this year. There's been cases of resource nationalism in the press with regards to a couple of Latin American countries. As we're doing the interview today, we've got tension between Ukraine and Russia. There's obviously a situation with regards to sort of like China as well. How do you think geopolitical risk in 2022 will affect gold and precious metals?
Well, tough one. We made some research on the topic of geopolitical events, terror attacks, wars, and the performance of gold. And contrary to what most people would think, actually those geopolitical drivers have only a very short-term effect on the price of gold. So of course, if there's a big terror attack, whatever, if there's other sorts of turmoil, the reaction by market participants often is, okay, let's buy some gold, let's buy dollars, take some chips off the table. However, that's from my point of view, that's not the primary driver. But what happens in times of geopolitical turbulence, in times of war? Obviously, lots of money is being printed. Usually, central banks start lowering rates again. So that should be the real driver for gold going forward. And of course, what we are seeing at the moment with the whole tensions at the border between Russia and the Ukraine, of course, it's affecting oil prices. And oil prices, as we know, are a significant driver for future inflation. So I think we all really hope that this doesn't escalate. But obviously, times of economic crises often lead to times of geopolitical crises. And I think having a look at what's going on worldwide, I wouldn't suggest, or I wouldn't think that, unfortunately, 2022 will be a boring year now that hopefully the whole COVID thing is close to being over. So this is definitely something that will affect markets in 2022, but from my point of view, it shouldn't be the decisive reason why to hold gold.
Sure. And just one last question. If you could have one wish for 2022 with regards to the commodities market, what would it be?
Well, in regards to the commodity markets, I think that a falling dollar would be the best environment for commodities. We should not forget that last year, many commodities really broke out of long-term downtrends, despite um, a very strong dollar environment. So no, what's going to happen as soon as the dollar breaks lower? And I don't see that for the time being, but I see it on the horizon. Then this should really be massive tailwinds for commodity markets. Now, I see some sort of renaissance. I see some sort of rising interest in the commodity space. But for some reason, most of the institutional players that we talk to, they say, well, now it's already too late to start reallocating into the commodity space. So I think it's basically a bull market that nobody is really invested in. And having a look at the supply demand picture, having a look at the levels of investments during this brutal bear market in the commodity space, I think we're really moving into an environment of scarcity in some particular metals, like nickel, for example, lithium. I really like copper at the moment. We're very confident when it comes to uranium. So I think I think the tide has turned. And if the dollar should start a bear market, I think that would only be the icing on the cake. So that makes me really confident going forward.
Okay. Well, it's always a pleasure to go and hear from you, Ronnie. And I hope that the next time I interview you, it will actually be live and on the stage and in person. But we definitely wish you and the whole team from Incrementum a really successful 2022. We think that your In Gold We Trust report is the best in the business, and hope you have a fantastic year ahead. That was Ronald Peter Stöferle, managing partner and fund manager of Incrementum AG.
Thank you very much, Andrew. All the best and a happy, healthy, and prosperous new year. Thank you.
Thank you.